Kitco Mining's special coverage of the Rural Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.
Gold gave markets a meaningful signal when the metal hit an all-time high early this year, according to our next guest, Lobo Tiggre, editor of the Independent Speculator. But he is near-term bearish on gold. Hello and welcome to Kitco Mining with me, Paul Harris, at the Rural Symposium in Boca Raton, Florida. Lobo, welcome back to Kitco.
Happy to be with you, Paul.
Well, thank you for joining us. Most speakers here at the event have been talking up the precious metals, but you are bearish. What gives?
Well, I'm glad to have a chance to say this, clear my good name, because, obviously I'm not anti-gold. I'm not a gold bear, such. On the other hand, I want to be a rational market participant. I don't want to be religious. I'm not here to save the world with a new gold standard. I'm here to make money as an investor. And we can go as deep down this rabbit hole as you want, but the simple version is that the apparent victory of Team Soft Landing is not good for gold. Safe haven demand is part of what it's at. But you've also got, high interest rates, and the Fed is promising higher for longer without causing a recession, apparently. Now, I don't think it'll stay this way. But for right now, while that lasts, we've got decades of numbers that tell us this is bearish for gold.
And you said you're short-term bearish. In terms of, how long is your short-term view on that? When do you think that will perhaps turn into not being bearish?
Well, I'm famous for not wanting to make predictions, right? I don't have a future-seeing crystal ball. But if I'm going to say something like this, I feel, I do need to quantify it a bit. So I'm actually talking pretty short-term, like the next couple months. I think that Team Soft Landing is wrong. I'm not saying that they're actually right. That's why I say the apparent victory of Team Soft Landing. And so there's sort of two pathways here. One would be they're just sort of garden variety wrong. Things aren't as rosy as it seems, and they start falling apart over the months and quarters ahead. In which case, it could be that the bears on Wall Street are right, and the recession has been pushed off to 2024, maybe even late 2024. I see that as a worst case scenario. I actually think that the Fed will be forced to pivot much sooner this year. I think we'll see not the recession happen. I think we're actually in a recession, and it's been masked by post-COVID lockdown market distortions, like the labor hoarding. These kinds of practices make the labor market particularly, but the general economy look to be in better shape than it really is. Even while we have mass layoffs and closures, and you look at the outlook from the Wall Street earnings season and so on, never mind the leading economic indicators, the yield curve, federal income, revenue from taxes, all of these things that have decades of correlation with recessions are flashing, red lights, recession. And Team Soft Landing is ignoring that. And right now, it looks like they're right. People on Wall Street are just all about Team Soft Landing. It's right. So I think that going from 0 to 500 basis points in a year is a smashing thing to do to an economy in a bad way, not a British smashing thing, an American smashing thing. That's bad. The regional bank excitement that we had a couple months ago, I think that's just an overture. I think the other shoe drops this year, before the end of this year. I think the Fed pivots. I think all kinds of good things happen for gold bugs. But until then, I think a rational speculator should expect headwinds in gold.
Okay, thank you. What do you think will cause the denouement of Team Soft Landing and expose some of those distortions?
We've got candidates. Commercial real estate is one that's often cited. The impending, doom of students with their student loan payments and those moratoriums coming off and their retrenchment and spending, that could be another. But I'm thinking about what happened with those regional banks, and it's not that no one saw it coming exactly, but kind of no one really did. It's after the fact, everybody's, oh yeah, that was obvious. And the gilt thing that happened last year in the UK, it should have been obvious, and maybe somebody out there was warning, but generally speaking, the markets didn't appreciate that risk. After the fact, oh yeah, that was obvious. I suspect that it might not be commercial real estate or the student loans or something that you and I will point at now, but afterwards, if we have this conversation in 5 months, we'll be thinking, that was obvious.
Do you think there's an element that, confirmation bias blinds us or blinds the markets? We've got this perhaps Dr. Pangloss aspect where everybody wants things to go well, and so you kind of put the blinkers on and don't recognize some of the things coming up. that are going to bite you in the ass.
Yeah, can we say that on TV? I'm glad you did, not me. But I think that's exactly where we're at right now. There is not just recency bias, but there's also confirmation bias. And I've noticed this. Have you noticed this? Not on Kitco News, of course, but those other irresponsible folks on mainstream financial media, the Bloombergs of the world and so on, they want markets to go up. If you're a savvy market participant, you can make money going short. Like, it doesn't have to be that stocks go up. If you correctly anticipate the trends, you can make money whether they go up or down. You just need to be right. And so if you're a financial reporter, it seems to me that you should cover, both ways of things. And it doesn't matter whether the markets go up or go down. It matters whether your trend is investable. But that's not the way they report it. If things are going down, that's bad, right? You know what I'm saying?
Yeah.
So I think there's absolutely a confirmation bias, and I think that people are hearing it from the mainstream media types. It's risk on, it's go, 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 everything's fine. And frankly, I think that's leading the lambs to the slaughter. Now, I might be wrong. I mean, and by the way, this isn't a someday, I might be proven, I'm saying that this year, the other shoe will drop. And either Team Soft Landing will be more right than I'm giving them credit for, or Lobo Tiggre will be flat out wrong. That happens this year. If I'm right, all of these cheerleaders on Wall Street and their lapdogs in the mainstream media, they are performing an active disservice to the investing public right now.
It does seem there is an overwhelming fundamental support for some of the big tech companies, the big names, because, I don't know, they've risen to the level of titans and so forth. They've got to be respected, perhaps protected, and rah-rah all along the line.
You called it fundamental support. I'm not sure I would agree with that characterization. They have an enormous amount of support, yes. The narrative is fantastic, hard to be better. I mean, but come on, NVIDIA at 250 times PE? That's not fundamentally good in any way, fashion, or form. And how can that be anything other than ridiculous? Pardon me, right?
Understood. Okay, let's talk more about gold specifically now. You've noted that gold hit an all-time high early this year. Still, it's been a tough year for gold investors. The GDX is barely up year to date, while the S&P and the NASDAQ, other key investment vehicles, have been up much more. What's weighing on the gold sector?
All right, well, we need to differentiate a little bit here. It's not gold, it's gold stocks. The things you quoted that are way down are the stocks, and the metal itself is actually having a good year. The other yellow metal is having an even better year. But gold's not actually having a bad year. And some people see this as a reason to be even more bearish. They're giving up, they're disgusted, gold's doing fine, but the stocks are not, so I'm sick of this and I'm out. I'm not sure what to say. I don't want to sound like Linus in the pumpkin patch, the great pumpkin's coming any day now, just believe. On the other hand, decades of history tells us that if gold breaks out, the gold stocks will not be left behind. And gold, even if it was treading sideways, we're slightly up this year, but even if it's treading sideways, in an environment of rising and high interest rates, real rates of, the dollar has been lower lately, but until more recently, the dollar was starting to rebound. And basically, there are sort of traditional headwinds, if you will, that explain why gold itself should have been down more than it is. And so I would separate the metal from the stocks. And I'm not just quibbling here. I think this is very important. I personally view gold bullion as how I save. I don't trust the banks. I wasn't caught out by any regional banking crisis because I put my savings in bullion. I'm a stacker. And at that point, I'm not worried about the price. I have something that's real, it has value, and whatever happens in the paper world, I'm fine. So gold aside, the gold stocks, there are some very erudite explanations for this, rising costs. That's a real thing. We talk about inflation being high.
Well, let me jump in there, Lobo,
Okay.
because you're right, the gold price has been actually pretty good, and most producers have healthy margins and have been making, good money. Yet their share prices aren't really reflecting that. And people often invest in gold stocks because they have leverage to the gold price,
Yes.
but it's not there.
Yes. Well, it's not there right now. So I can't deny that. That's the fact. And I see it in feedback mostly on Twitter. My own subscribers, I think, are a little more calmer group. But on Twitter, I get the pushback all the time. I say anything positive about gold, it's like, oh, these gold stocks suck. They're not doing what they're supposed to. They're supposed to offer this leverage. That's our whole reason. Like, why would you take risk on a producer, let alone an explorer, if not for the leverage to the underlying price? So if you're not getting that payout, then why bother? And so my take on this is that the rational answer is that rising costs and so on are reason to be skeptical about the stocks, political risk, other things. Africa's resource nationalism is really resurging strongly in Latin America. It seems like, even the most pro-mining jurisdictions are taking a turn to the left, if not an overtly anti-mining stance. So I get it, but I actually don't think that's what's happening. This is my take, for what it's worth.
So why do you think there is that disconnect?
Yeah, that's where I'm going.
Oh, sorry.
I think that recency bias, or what people remember, is the last gold spike, and that was 2011, and gold hits then nominal, actually a real all-time high. I think that it wasn't real, not in $1980. Nominal all-time high, waffles sideways for a bit, falls off a cliff for years and years and years. That's what everybody remembers right now. What's their comparable? Their nearest comparable? It's not 1980. It's 2011. So I think, I can't prove this, but I think Mr. Market is like the cat on the hot tin roof, just can't get off fast enough. And this isn't you or me or the average gold bug that goes down to the local coin shop to buy another, eagle. This is the COMEX traders, LME traders, the people who watch Forex, the DXY and the Fed's latest decision. These people whose trades on the futures market we mistakenly refer to as the price of gold. Those people, they're just waiting for gold to crash again. Their question is, how long can it stay up here around 2000 before we get another big slide, like from 2012 down to 2015? I think that's what the mainstream, to the degree that there's a part of the mainstream that cares about gold at all, that's their reference, their guidepost. And if that's, if that's your guidepost and you're a forward-looking participant in the markets, why on earth would you own the stocks ahead of that? So I think that what happened this year with gold hitting a new nominal all-time high really shakes that up, and that's part of why gold is hanging on. And the longer this goes without gold repeating that past pattern, I think the more kindling this puts under the fire. And if we get a real breakout here, gold goes up to 2100 and so on, I think all these unloved stocks will suddenly feel the love. People will realize, oh my gosh, it's not going to be 2011 all over again. This gold bull market has legs, it's here to stay. And I'm not normally a cheerleader pounding the table, and I've just said I'm bearish near term on gold, but I do think gold bug payday is coming, and I think with a vengeance. Maybe wrong, but I expect serious momentum to come into this in the next breakout.
Okay.
The stocks too, not just the metal.
I think it's another interesting factor or dynamic on this is that for much of the past decade, the gold companies have been working hard to make themselves more investable.
Yes.
Strengthening their balance sheets, paying down debt, being very risk averse in terms of M&A and developing assets, which is perhaps creating fertile conditions for an outbreak. What's your view on how the gold sector has evolved in recent years? We've seen a few mega mergers. Are there more to come?
Yes.
Is there more consolidation? Will the participants continue to strengthen?
Yes. Well, so, before the COVID lockdowns and everything, threw everything out the window, I wrote an article called Takeover Tsunami is Coming. So, big egg on my face. Just goes to show to your audience, I'm not always right. Of course, I didn't see COVID coming. But to be fair, and autocritical, frank with myself, I have to say it's been really a couple years since the lockdowns went away, and we're still not seeing this big wave of takeovers of the smaller companies that most of our audience invests in. So what's wrong? And my thesis now is that, frankly, I've been surprised. I did not expect as much M&A activity on the top of the pyramid as we've seen. And they're kind of running out of big gold companies to buy, but still with this Newmont Newcrest thing, it's still happening. And when this happens, Barrick buys Rand Gold, or Agnico and Kirkland, when they do something like that, it takes them a couple of years to digest a big acquisition. At that point, they're not looking to buy anything. They're divesting non-core assets. So if this Newmont deal goes through now, that takes Newmont out of the acquisitions market for the next couple of years. But they're going to be looking to sell. What do we not need that we just got with this? Let's focus on the core assets. So that's the bad news. The good news is that this literally is something that cannot go on. I can't give you a deadline on this. I can't say, here's the date. But I can say that we all know for a fact that a mining company, with every ton that it mines, every ounce or pound it takes out of the ground, that's much less resource that they have. And if they're not exploring or building, they've got to buy, or they will mine themselves out of existence. So I think, I think we probably look more to the mid-tiers for a while. And we're starting to see, lights on consolidations. By that I mean like juniors, buying each other because one has a project and one has cash. That doesn't really help a whole lot. But I think we probably look to the mid-tiers that haven't made a discovery or haven't built a new mine, and they're going to be looking for what can we buy that's an asset of value. Long story short, I think takeovers are overdue. They cannot be put off forever. I think, we may not see the great tsunami this year, but I think we will see more M&A, and I think we will see it starting to trickle down to the junior space before the end of this year.
Thank you. Do you think there's an element that juniors are too cheap for M&A to happen? A lot of the juniors are trading at 70 to 90% less than they were 2 years ago. Company management, company boards, even if they got let's say a 50% premium, they think that's still far too cheap for them. Spoken to a couple of the exhibitors here, they said, at these prices, we do want M&A, but not at these prices.
Well, yeah, they don't want to get, we call that a take under, right? You get a low ball offer when the market's down. And this is really important actually for the audience. We have a free download, if you don't mind me mentioning, on our website on takeovers and what to look for. And this is really important because if you get a cash offer when the stock is down, that basically is locking in a loss for anybody who bought, anywhere above that offering price. And if you're off 90%, you get a 30% premium that, you're still underwater. So you want an offer for shares at that point. If not, you want to vote against that. So we won't get lost in the weeds there. I do recommend that download. But in terms of what to look for, who's a good acquisition target, I have a list in that report. But the quick short version would be it's not actually price. The buyers are not price completely insensitive. You can't buy more than it's worth. But you're really looking to reduce risk. So you're looking for something that's either fully permitted or obviously, relatively permittable. It's not got red flags all over it on the permitting price front. The economics, you want something that clearly works. You want something that's permittable. Your jurisdiction, maybe even financing. With the sector in the doldrums, if you're the buyer, you can sit back and let the junior blow its brains out, diluting its shareholders. Raising money to build and do all this stuff, and then swoop in. Go ahead.
It's been a terrible market for gold juniors to raise money for pretty much most of this year and maybe a little bit longer back into the past. So a lot of companies must be coming up to that real crunch time where they need to finance. It's either going to be impossible or ridiculously expensive. Do you think that will facilitate a few transactions, maybe capitulation transactions?
And in terms of takeovers, no. Because I really think that's entirely if it's a good project and we can permit this, we can build this. This is something we want to do. Then the price is secondary. And if it's not a good project, being able to get that on sale doesn't do you any good. So for takeovers, no. For investment opportunities, I think that actually is. This is to the disciplined speculator who's willing to buy low when capitulation is in the market space. This is a very good thing. It's like a litmus test. Who has the money? And occasionally, somebody just screwed up. They should have raised the money. They didn't. Now the market's down and they can't. But by and large, on the junior end, the companies that have a nice treasury, that tells you a lot about the quality of their assets and the quality of the management, that they had the foresight to raise money when they could, and that investors were willing to give them that money. So you have, 3,000 of these juniors out there. How do you know which ones to buy? I think this actually is a tool that the investor out there can use. Look at their financial statements. Look at their fundraising history. What does that tell you about this company? And in this environment, that really can help you sort the wheat from the chaff.
Okay, that's really sound advice there. Let's talk about copper and critical metals for a bit. The past year or so, the narrative in the mining space really has swung towards copper and critical metals and away from perhaps gold and silver because of the fundamental need for these materials for the energy transition and other things like that. Are these a better opportunity now than gold stocks?
At this moment right now, I would say no. And silver might be the who knows what, because silver has an increasingly industrial side, as I'm sure you know, and many of your guests have said. And that's a very real thing. And for most of this year, if you look at the charts, the daily charts, weekly charts, you'll see silver will shadow copper on the charts more closely than gold. And so if Team Soft Landing appears to be right, we might actually get a bit of a tailwind for industrial metals, which could help copper and silver, even if it doesn't help gold. And that's not a prediction. I honestly don't know which way this will go. There are times where silver remembers it's a monetary metal, and it goes back to tracking gold. And I don't know how that will go this year. But despite Team Soft Landing's apparent victory right now over Team Tigre, I do think we're going to see undeniable signs of recession before the end of this year. And so buying copper or any industrial metal right now ahead of that, if I'm right, if you have a long-term outlook, maybe you come through the other side just fine. And eventually they go much higher. I actually believe that could happen. But I know that if I told people, go buy copper stocks now, and your copper stock goes down 50% before the end of this year, you'll be, with pitchforks and torches outside my gate saying, Lobo, why'd you say that, right? So I have to say that, my view is we're likely to see much better buying opportunities in the copper space. And I say that as a long-term copper bull. I really love copper going forward after the recession.
Okay, energy transition's been a big theme over the past couple of years. So let's talk a little bit about uranium. Uranium obviously is the fuel, is made into the fuel for nuclear reactors. The world's opinions and views about nuclear power are changing and becoming more positive given the efforts to decarbonize. But it seems to have dropped a little bit from the narrative over the past 6 to 12 months, although nothing really has changed in the underlying story. And the uranium price is up this year. What's going on?
Well, uranium price is up, but modestly. And below the recent peak. So it rushed up during the war outbreak to $64 or so, and then it corrected, which the scare went away, no surprise. And then since then it's been kind of waffling sideways, just slightly up, not a breakout that would get excitement. So this is one of those things where if you've been in uranium for a long time, you've seen this before, you know what I'm talking about. If you're a more recent investor in the uranium space and you look at the metals doing okay, but the stocks are doing terrible, what's wrong? This is broken. Again, you get capitulation, I think, for the wrong reasons. If you're underwater and you're disgruntled, you may not have patience for what I'm saying here. But it's just not the way markets work. Not only decades of experience, but just think about it. It makes no sense for the price of the metal to go up and the stocks to just be left behind. Now, we know on a day-to-day basis, if the market has a bad day, right, for something completely irrelevant, right, the AI, there's a scare or something, and the tech sector sells off, that will whack uranium stocks as well. And people will be like pulling their hair out, what's wrong? This has nothing to do with uranium. But stocks are stocks, and uranium stocks are stocks. The market's down and it whacks the stocks. But that can only go on so long. And it tends to happen on a daily basis. If you look at the uranium stocks over even just this year, they don't entirely track the market. And if you look at them over, say, the last 5 years, if you take a step back from your recency bias, the uranium is up over the last 5 years. The uranium stocks are up over the last 5 years. If you were in early enough, you're actually a very happy camper here. It's only the people who have bought on the recent interest and are underwater that are saying, what's wrong? This is broken. And my message to you is nothing wrong. It's not broken. Be patient. It may be wrong, but I'm putting my own money where my mouth is. Right now, I have more uranium stocks in my portfolio than I've ever had. The only stock on my shopping list right now is a uranium stock. And I think we talked about the recession in the industrial metals. I think uranium is more recession-proof than just about anything else besides gold, because it's baseload power. Like, you may decide not to take a trip to grandma's this week if you're tightening the budget at home and spend less money on gasoline. But you want the lights to turn on when you flip the switch. You want your hospitals to have energy no matter what. And that's what uranium nuclear power is good for. So I'm very bullish, and we've just done some new research here that we will be publishing for free on our website, paying clients first. But we have a new finding there regarding high prices curing high prices. And I have actually been near-term bullish on uranium for a while, but long-term kind of bearish because there's a lot of uranium out there that could come to market. But our latest research says not so fast, that it may take a lot more to balance the market than I have given it credit for. So I'll share that soon, but I'm just saying I'm actually more optimistic than I've been for a while.
Okay, thank you. Now, we've talked about gold, we've talked about copper, critical minerals, and a bit of uranium. What kind of investment opportunities and stocks are you recommending to your readers at the moment?
So right now, as I said, I don't do recommendations as such. I try to lead by example. So my portfolio in Independent Speculator, it's not that I just may disclose from time to time, I might own some of these, whatever. This is what I'm doing with my own money. And so my whole shtick is I lead by example. And so right now, when I mentioned the only stock on my shopping list is a uranium stock, that's what I'm doing. That's how I see the markets at this very moment. And that's, if you want to call it a recommendation, you can, but I think of it as leading by example. And that's in the nearest term. Over the course of the year, I do think that Team Soft Landing will be proven wrong. At that point, I'm looking to go back into gold as well, or I haven't sold, but I'm not buying now, but I'm looking to start buying then. And we'll see how silver does. And as soon as the recession really hits, I think then we'll have an opportunity to buy great copper stocks, maybe lithium too, maybe silver too, depending on which horse it rides. I'm eagerly looking forward to deploying into more sectors. But right now, I'm laser focused on uranium because I think it's the most resistant to the headwinds I see in the immediate future.
Okay, to bring our conversation to a conclusion, what are the sort of catalysts or signals that you're really looking out for over the next, say, 6 to 12 months?
Well, that far ahead, the biggest one will be the recession. I sincerely believe that the U.S. economy is in and heading deeper into recession, and the global economy, no question. And so I don't see that as a new thing that will happen. The thing to look for is for this to become undeniable. I call it the recession deniers. When they capitulate, and I think that creates the maximum point of fear and the maximum point of investment leverage to the buyer who has the guts to buy low at that time.
Excellent. Well, Lobo Tiggre, thank you very much for sharing your thoughts and research with us today.
Thank you.
And stay tuned to Kitco Mining for more from the Rural Symposium in Boca Raton, Florida.
Kitco Mining's special coverage of the Rural Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.